Welcome back to the Prajna series. In this episode, Shri Rajesh V. George will take us through a quick recap of the key concepts covered in the previous sessions. Following that, he will provide a comprehensive explanation of GSTR to A and GSTR to B returns.
Good morning. Welcome back. Let us start by summarizing what we have learned till now. I was telling you that what is actually there in the GSTR 1 is the data pertaining to the documents that have been issued during a particular tax period. And we used the concept of time of supply to understand the documents that are there. Just let me summarize what we have learned till now. Now, I said that there is an invoice is the first document that is issued. Now, an invoice for a goods needs to be issued before or at the time of removal of goods. In respect of a service, it has to be issued within 30 days for most services, except for financial institutions, banking, insurance, and I think telecom, it is 45 days. When the value shown in the tax invoice, the taxable value or the tax shown in the invoice is greater than, is more than what is actually to be reflected, we can use a credit note to rectify that particular, to reduce the taxable value or the tax. There are a couple of other circumstances when a credit note can be issued. A credit note is issued in two other circumstances: when the goods or services are returned, and when the goods and services are found to be deficient. Similarly, when the taxable value or the tax shown is lesser, we issue a debit note. I also spoke to you about another document which is called as a revised invoice that is possible. A revised invoice is issued by a newly registered taxpayer from the effective date of his registration till the actual date of his registration certificate. So you have the other document, that is a revised invoice. Now, the second limb of the time of supply concept was the payment. Every time an advance is received, the taxpayer or the supplier needs to issue what is called as a receipt voucher. Once a receipt voucher is issued, what happens is there are two possibilities. The first possibility is that a supply happens, and the second possibility is that there is no supply. In the circumstance where the supply happens, the taxpayer issues an invoice, and when there is no supply happens, there is a requirement of issuing a refund voucher. These basically are the documents that are the data pertaining to these documents that are actually reflected in the GSTR 1. In addition to this, I also spoke to you that there is a bill of supply which is generally issued by a composition levy person or by a normal registered taxpayer whenever he makes an exempted supplies. He has an option to issue a bill of supply, or an invoice cum bill of supply. That is what he can do. Finally, I told you that there are two other documents that are there, especially when it is a reverse charge supply. A reverse charge supply from an unregistered person, a self-generated invoice is issued. Self-invoice is there. And in the case of a reverse charge supply received from a registered taxpayer, there is a requirement of issue of a payment voucher. The last two documents that I spoke to you about was the invoice issued by the ISD person issuing an invoice, and there is a delivery challan. Basically, this is what is visualized, or this is what is actually explained to us in section 31. Section 31 read with, I think, rules 46 to 55. Now, the data pertaining to these documents that have been issued during a particular tax period needs to be reflected in the various tables that are there in the GSTR 1. Now, if you were to just remember let's try to just recall what are the various tables that are there and the logic for that, reflecting that data in the GSTR 1. Now, again, we use the concept of time of supply, and we also use the concept of levy, which has three limbs that are there. The concept of levy has three limbs. One where the supplier pays the tax, which is called as a forward charge. The second is the recipient paying the tax, which is called as reverse charge. And the third part is the aggregator. Supply is made through an aggregator, which is specified under notification number 17 of 2017 CTR. In respect of these supplies, the aggregator pays the tax. There are also circumstances in which aggregators are required to collect tax that will be other than what is specified under 17 of 2017. So let us just try to summarize the various tables that are there in GSTR 1. We started with this aspect that there is a supply, the first limb of the time of supply. Whenever there's an invoice that has been issued, I say that, okay, a supply has happened. Now, when the supply has happened, we say that there are two possibilities with reference to a supply, that supplies are within India and supplies are outside India. Now, when it is within India, we take the first limb of the section 9 or the levy provisions. It pertains to a forward charge. Now, let me take it one at a time. Forward charge. When there is a forward charge, supplies can happen to charge from a registered person to another registered person. All supplies to an SEZ needs to be reflected in a table which is 6B, and it will be invoice-wise entries. Now, this is the document that we spoke about. This is the first document. So there is an invoice-wise entry under table 6B. A deemed export supply. A deemed export supply, we need to always remember, is what is specified under 48 of 2017 CT. Supplies which comes to the deemed export supplies are supplies to a 100% export oriented unit, supplies against an advance authorization, supplies against an EPCG license. And I think there's one other type of supply which is covered, which will be a deemed export. You need to identify this deemed exports separately in respect to the supplies to a registered person, for the simple reason that the tax that is paid at the time of supply can be claimed as a refund by either the supplier or by the recipient. So the deemed export supplies are reflected in a table which is 6C. Any other supplies to a registered person, others, are reflected in a table which is 4A. Now, it is very much possible that once an invoice has been issued, it could so happen that there was a possibility that the taxable value of the tax shown is more, or it is less, or the goods and or services have been returned, or it is possible that the goods and or services are found to be deficient. In these circumstances, the document that gets issued is a credit note or a debit note. So all credit notes and debit notes issued by a registered person to any other registered person, that is here all put together, are entered in a table which is 9A. Now, it is also possible that the taxpayer, while entering the data in the respective tables of 6B, 6C or 4A, makes mistakes while data is entered into these tables. Any mistakes that are made in these tables 6B, 6C and 4A are corrected in a table 9A of the GSTR 1. Similarly, this credit note and debit note is actually 9B. Now, any mistakes that is made in the credit note or the debit note table 9B can be amended in the table 9C of the GSTR 1. The next part of the forward charges applies to an unregistered person. And when I told you that unregistered person, there are two parts to this one. One is called as a B2C large, and the second one is others. Now, in a B2C large, what is a B2C large? It is an interstate greater than 2.5 lakhs till July 2024, and from August 2024 it is greater than 1 lakh. 1 lakh is at a taxable value greater than 1 lakh rupees. Now, all entries pertaining to B2C large is entered in a table 5. If there is an amendment required, it happens in a table 9A. Debit note, credit note continues to be under 9B and 9C. Just because we have the same table reference 9A, let us not confuse this one. For the taxpayer, what happens is when he is entering the data, he has a separate table 9A for registered persons. He has a separate table 9A for an unregistered person. Similarly for 9B and 9C. Now, B2C others is a place of supply wise, rate wise summary that is reflected in a table 7, with another aspect that is there is that it is always reflected as a net off figure, net off between the invoices and the debit note and the credit note that is reflected, that has been issued during that particular tax period. Any amendments in table 7 happens through table 10. Now, once we have covered the forward charge, the second limb is that there is a reverse charge. In respect of a reverse charge, it can be only supplies to another registered person. This is reflected in a table 4B. Any corrections in that happens in the table 9A. Debit note, credit note happens in 9B. Corrections to debit note, credit note happens in 9C. Now, once we have done the reverse charge, the third limb of the levy provision is supplies through an aggregator. Now, you have to remember one aspect is when supplies through an aggregator happens, there is two requirements. One is the supplier needs to enter the details, and second is the aggregator also needs to reflect the details in his GSTR 1. The supplier has to reflect the details pertaining to aggregators who collect tax at source. That is, there is a TCS involved in that under section 52. This is reflected in a table 14A. Any amendments to that happens in a table 14AA. Similarly, section 9.5 tells when the supply happens through an aggregator where it is specified under 17 of 2017 CTR, in respect of that, the aggregator needs to pay the tax. That is reflected here in paying tax. The supplier reflects in the table 14B. Similarly, any amendments to it happens in a table 14AB. Finally, the aggregator also has to reflect the details, the supplies that have been made through the aggregator where the aggregator pays the tax, and that happens in the table 15. Amendment in the table 15A. What are the other types of supplies that are very much possible? It is that there is an exempt supply, a nil rated supply, and a non-GST supply. These are reflected in tables 8A to 8D. Outside India, we actually refer it to as an export. The export is both in respect of goods, services, and it can be on payment and it can be without payment. This is reflected in a table which is 6A. Any amendments to this table happens in table 9A. Debit note, credit note happens in table 9B, and amendments to the debit note, credit note happens in 9C. Now, this is the first limb of the time of supply, which is where the supply is happened. The second limb is where advance has been received. When an advance is received, there is a requirement of issue of a receipt voucher. The receipt voucher details are actually shown in table. There is a receipt voucher, and these are shown in table 11A. Any amendments to that particular table also it's possible to have. Here you have, I think it is 11A1 or something like that it is there. There's one table reference which I don't recall at the moment. It is very much available in the form. Now, what happens is once a receipt voucher is issued, I did tell you that there are two aspects that happens. One is once a receipt voucher is issued, there is a supply happening, and it is possible that there is no supply happening. Whenever a supply happens, it goes back to one of these entries in invoice-wise entries. Now, when there's a no supply happening, there is a requirement of issue of a refund voucher. Now, 11A, we need to be very cautious in this particular aspect, is that whenever entry is made in 11A, it is always receipt voucher minus refund vouchers is reflected there. That is when there is no supply that has happened. Now look at this perspective. I told you that when a supply happens, an invoice has been issued, the invoice value will be the actual value. If you recall the example that was actually had given, the invoice value is 1 lakh rupees, the receipt voucher was 50,000 rupees. So now the receipt voucher would have been actually shown in a particular tax period, whereas the supply may be happening in the subsequent tax period or later tax periods that are there. Now, in respect of whenever the supply happens, the supplier will show the invoice value as 1 lakh in one of those tables. But now the taxpayer also has to show what is called as an advances adjusted. That is there, and it has to be entered in table 11B. Amendments in 11B, I think 1. or 2. Now, these are the various tables that are there in GSTR 1. Last couple of tables that are there is the table 12, which is HSN-wise entry that needs to be reflected, and table 13, which is actually the documents that have been issued during that particular tax period. So I think this is what this particular slide, one single slide, encompasses the entire GSTR 1, the various tables that are there, and the logic for that is, this is the logic in which the tables actually are put in place with reference to the GSTR 1. I hope this part of it is clear. The next part that I told you is once a GSTR, now I told you that the GSTR 1 has to auto-populate GSTR 2A, it has to auto-populate GSTR 2B, it auto-populate the data in the GSTR 1 is made available in the invoice management system, and from the GSTR 2B, it also has to auto-populate 3B. The next part of what we are going to learn is, what are these 2A, 2B, because I did speak to you about the invoice management system also. The invoice management system, all entries in the GSTR 1 comes and falls into the invoice management system. If the recipient finds that the entries pertaining to the GSTR 1 are correct, all correct, he has the option of doing what is called as, and he goes and takes an action of accept. But when he notices that it is an incorrect GSTIN that has been reflected, that the supply does not pertain to him, but it is pertaining to somebody else, by mistake the person who entered the GSTR data in the GSTR 1 showed the wrong GSTIN. In such a scenario, the recipient needs to take an action of reject. There is a third scenario that the goods or the services are being moved on the last day of the month, but received maybe in the subsequent month. It does not pertain to the same tax period as the GSTR 1. So in that particular circumstances, the taxpayer has an option which is called as, he can keep the record pending. Now all entries in the invoice management systems, suppose we have to visualize that, there is a requirement of a recipient or the taxpayer having somebody to take these particular action. But in case a taxpayer does not, doesn't go ahead and takes any of these action, what the system does is, the system goes and creates a deemed acceptance. System goes and creates a deemed acceptance, and all the accepted and the deemed accepted records that are there in the invoice management system, all these flow into the GSTR 2B. Despite the fact that we spent a lot of time on understanding the GSTR 1, and I did tell you that GSTR 1 is nothing but the details of outward supplies, and it is a statement or it is a returns of primary data. That means it is all user entry data. There is nothing that auto-populates in that auto-populates into the GSTR 1. Now, whatever is there, the data that is there in the GSTR 1 auto-populates into the GSTR 2A and the 2B. Now, which are the tables from the GSTR 1 that can auto-populate? It will be auto-populate into the 2A or 2B. It will be those tables which are actually pertaining to supplies from one registered person to another registered person. That is, from supplies, any supplies that are there from one registered person to another registered person. If I were to recall, the tables that will be there is, the first one will be an SEZ, which will be table 6B. Second one is deemed exports, which will be 6C. Others will be table 4A. The other possibility is, now in this registered person, we have to take this as, this will be pertaining to a forward charge, and then there will be a reverse charge, and that will be entered in a table 4B. Any of these corrections pertaining to these tables will happen in table 9A. Debit note, credit note will happen in table 9B. Amendments to that will happen in table 9C. That summarizes whatever we have actually learned till now. Now, the endeavor that we have going forward is that we understand which are the tables auto-populates into the respective tables of your GSTR 2A and GSTR 2B. pertaining to the invoice management system that is there. Now, this is what a brief of the invoice management system, which I spoke to you about in length yesterday also. Now, here is what you will see in the invoice management system. The invoice management system is an optional facility which is available from October 2024 onwards only. Now, it is available to a normal taxpayer, a casual taxpayer, and an SEZ unit or a developer. Now, the action that are possible in an invoice management system are you can accept, you can reject, you can keep it pending. Now, the accepted records will be reflected in the ITC available of your GSTR 2B and will auto-populate into the GSTR 3B. Rejected records will reflect in ITC rejected of the respective GSTR 2B and will not auto-populate into the GSTR 3B. Pending records will be made available till when you want to use it on a subsequent, when you can take the action of accept, reject or pending in the subsequent tax periods. Records where no action is taken will become what you call in those cases, it will be a deemed accepted record. And finally, in respect of an IMS, there will be both a recipient view and there is a supplier view, so that once the recipient actually rejects those particular entries, if at all there is a rejection that is happening in those entries, it is very much possible that the supplier can go ahead and file its GSTR 1A so that he can make the correction in the same particular tax bill. Now, I think there's one option that is there. In a GSTR 1A, if it is a wrong GSTN, it cannot be corrected using a GSTR 1A. I think that drawback is there. Now, this is how the taxpayer's view comes on the system. There is an inward supplies, there is a supplier view and a recipient view also. Now, when you look at these various invoices that are there, this is a view that is available for the taxpayer. There is no action, how many are there, so that gets into a deemed accepted. So there is an accepted, rejected and a pending option that is there. It all is detailed here. The various advisories that have been issued in respect of the invoice management system, I just tried to put down all those here. You can always go back and have a look at it. Now, the GSTR 1A, it is available. Yesterday also I spoke to you about this one. I'm just summarizing what we try through the slides that are there in the PPT. The GSTR 1A is that it is available for amending the current period's GSTR 1. It can happen only, you can use the GSTR 1A only after filing of the GSTR 1 till the date of filing of your GSTR 3B. If you have already filed the GSTR 3B for the current tax period, the system will now, the taxpayer doesn't have the option of filing a GSTR 1A. Now, is there a due date? There is no due date except the fact that it has to be filed before the filing of the GSTR 3B for the current tax period. Is it compulsory? No, it is optional. Now, is it possible to amend a recipient's GSTIN in the GSTR 1A? It is not possible. Only option for that is you have to correct it. You have to amend it in table 9A of the subsequent, in the subsequent GSTR 1. GSTR 1A is the filing not allowed. It will not be allowed after the filing of the GSTR 3B for the current tax period. Now, is there a concept of nil GSTR 1A? There is no such concept, or it is not available. Now, from when is GSTR 1A available? It is available from July 2024. This is the brief of GSTR 1A. Yesterday, whatever I spoke to or wrote on the note with reference to the various documents that are there, these are the various documents that are there and the provisions which tell you under which provision these particular documents are being issued. The sum total of all those documents that are there provided under section 31 read with rules 46 to 55. Finally, I also told you about the revised invoice. It can be this one. I think it is not clear here. It is actually effective date of registration till the date of issue of the registration certificate. Within that particular period of time, that is when the revised invoices are issued. And the revised invoices have to be reflected in the first GSTR 1 that is filed, which is called as first return, or which is provided under section 40. Now, here is where I'm sure that many of you listening to this will be wondering, how is it possible that the taxpayer goes and puts it into table 6B, 6C, 4A, 4B? A little challenging, I suppose. Now, here is where I ask you to pause for a moment and think, if you were to design a system, is it possible for you to actually club all the 4 tables? Because that is how the GST portal works, wherein they have clubbed all the 4 tables, 6B, 6C, 4A, 4B, into one single tab. to achieve that. Just a small diversion just to make you think as to how it is possible. What it does is the system, if you look at the various tables, this is where I want you to have your form GSTR 1 in your hands, and now try to visualize what we explained in those forms, how it actually reflects for the taxpayer when he needs to go and make those entries in the respective tables. Now if you look at it, you will see that table 4A, 4B, 6B, 6C have all been clubbed into one tab. That means despite the fact that there is 4 different tables in the form GSTR1, when the user inputs the data pertaining to these SEZ supplies or a deemed export supply or a reverse charge supply or other supplies to a registered person, he will be using only one tab. And how did the GST portal achieve this? This is worth actually having a look at it. Now, supplies to a registered person, here this will be the table 4A, 4B, 6B and 6C that is there. Once he says add record, what happens is, this is the basic information that the taxpayer actually captures, starting with the GSTI. How do you club all the 4 tables into one table, one tab? What they have done is, whenever there is an SEZ supplies, you see that that it can be on payment and it can be without payment. In respect of both, it is actually grayed out. What happens is, the moment the taxpayer enters the GSTIN of an SEZ, there is a flag in the database which says that this GSTIN is actually an SEZ. The moment the GSTIN pertains to an SEZ, both these boxes get enabled and the taxpayer is allowed to select one of it. The second aspect is, a checkbox has been provided for deemed exports and for supplies that attract reverse charge. So the GST portal, despite the fact that you have 4A, 4B, 6B, 6C tables that are there, I told you, if I recall, 400, 100 invoices that were there, whatever invoices, 500 invoices to a registered person, plus for reverse charge 600 invoices. He doesn't need to go and put it into the various tables. He doesn't need to identify. He just can use one single tab to make those entries. That actually I think is worth appreciating, the fact that you have 4 tables clubbed together into one with a simple logic where the GSTN, if it pertains to an SEZ, the checkbox for SEZ enables, and if it is a deemed export, the taxpayer has the option of selecting it. If it is a reverse charge supply, the taxpayer has the option of checking it. Now you need to remember, especially with reference to this reverse charge, it's crucial. Why? Because the moment it is checked, the system now knows that it is not the supplier's liability, it actually pertains to the recipient's liability. So let's just go fast through the various tabs that are there on the portal. You will try to link those tabs. The PPT is also available as a study material to you. You can always peacefully do it also. I'll just show it on the screen here, that this is how when the taxpayer, now here what you see here is, the moment this the location of the supplier is already available, and based on that the state code is known. The state code is known that if it is Karnataka, it is 29, so the state code is known. The taxpayer, the moment he enters the place of supply, as 29, or if the taxpayer the moment he enters it as 29, the system knows that it is an intra-state supply. If at all the taxpayer enters this as Tamil Nadu 32 or whatever it is, or Maharashtra 27, now the system knows that the location of the supplier is Karnataka 29, the place of supply is 27 or 32. What the taxpayer needs to pay is the IGST amount. Similarly, when the GSTIN of the recipient is an SEZ unit, the system will enable only the taxpayer to pay integrated tax and no CGST, SGST. So there is no such thing that the tax officer needs to go and check all these entries. These are all system-driven activities, and system takes care of it. Table 5 and 6A, this is how it looks. You can have a look at the PPT, which is at your leisure. I would request you to have a look at these particular slides, and if you want to have a more detailed understanding of how the system view happens for a taxpayer, on the GST portal, that is the gst.gov.in, there is a Help and Taxpayer Facilities tab that is there. Under the Help and Taxpayer Facilities, there is, I think, a Knowledge Portal, and when you click on the Knowledge Portal, the various functionalities which are available on the GST portal, there is a manual and a frequently asked FAQs available for each of them. Whenever you find the time, you are always welcome to have a look at it. I'll just run through this fast. So if it is table 8, which will be a nil rated, this one, so you have 8A, 8B, 8C. Table 15 is now the aggregator reflecting the details in respect of the supplies made through the aggregator, where the aggregator needs to pay the taxes. Now, we spoke about the amending tables that are there. The amending tables will be table 9A, table 9C, 10, 11, 14A and 15A. Now, this is how the tabs look, and individually this is how it appears for the taxpayer. Now, this is the table 12 which pertains to the HSN entries, and this is the latest advisory that I've just put for you for this one. There is a phase 2 and the phase 3. From April 25 onwards, what we follow is the phase 3. The documents that are there, you can have a look now. Various documents that we spoke about that is actually available or provided in the GST law is there. Invoices for outward supplies, invoices for inward supplies from an unregistered person, self-invoices. 31(3)(f). Now, this is basically the GSTR 1. We spend the maximum time that is there on the GSTR 1, because GSTR 1 is always where the primary data is there. The data or the primary data that is there has to auto-populate into the GSTR 2A and the GSTR 2B. From the 2B, it has to auto-populate into 3B. Certain table entries from the GSTR 1, 2B and 3B auto-populates into the GSTR 9. What we will try to do is try to have that, the flow of data, how it works till 3B and to some extent in GSTR 9. That's what we'll continue to do. Now. Let me give you let me start before I show you the slide which is pertaining to the GSTR 2A and the 2B. Let me try and explain this to you. Before I just put this down together in one particular screen, let me just write it down here for you, so that from there we can actually take it forward, come back to the PPT that is there and see whether what we have said is actually correct. Okay, now we head into the GSTR 2A and the 2B. Now, GSTR 2A, what I'm going to do is I'm going to split it into two halves, so that I use the same screen to make you understand or make you visualize what are the differences between the GSTR 2A and the GSTR 2B. Now, you have the GSTR 2A, I call this as R2A, and this will be R2B. Now, GSTR 2A, let me start with GSTR 2A. GSTR 2A actually has 4 parts. It has Part A, Part B, now Part C, and it has Part D. Section 38 read with Rule 60 is a provision which talks to you about GSTR 2A and 2B. The slide also has the details pertaining to that. The information is there, but let us try to understand, my focus is on trying to understand the data pertaining to which tables will auto-populate into the GSTR 2A and 2B. That is the intention of the session. The theory part is already there in the slide. I will talk to you about the theory part also. Now, Part A of the GSTR 2A auto-populates from the GSTR 1 and the GSTR 5 file. GSTR 1 is filed by a normal taxpayer. GSTR 5, if you recall, is filed by a non-resident taxable person. The Part B auto-populates from GSTR 6. R6 is filed by an input service distributor. Similarly, Part C is auto-populated from R7 filed by a TDS person, R8 by a person who collects tax at source, TCS person. Now, remember the example or remember the acronym that I told you about, NC, no ITC, U. That is the acronym for the type of taxpayers that are there, and it is filed by a TDS person and a TCS person. Finally, Part D is pertaining to the import of goods. Import of goods through the IceGate portal. Through the IceGate portal, all import of goods either from the port or from an SEZ gets auto-populated. Now, we spoke about the GSTR 1 because whatever is there in the GSTR 6, 7, 8, 6 auto-populates into the GSTR 2A. 7 and 8 is an amount actually that needs to be claimed. And if you actually notice, one small distinction that I've made is the fact that I put Part A, B and D on one side and I put Part C on the other side. The reason for that is whatever entries that are there in Part A, Part B and Part D is an input tax credit, and it flows into the electronic credit ledger of the taxpayer. Whereas a TDS and a TCS amount, which is actually an amount deducted from the total value of supply, is actually a cash component, and when it is claimed, it accrues into the electronic cash ledger. What we want to achieve is, we understood whatever is the primary data, the various tables that are there in GSTR1, whatever is there in GSTR1 has to auto-populate into the GSTR2A. Now, this Part A has 4 parts, which is serial number 3, serial number 4, serial number 5 and serial number 6. That is, in Part A, serial number 3 of the GSTR2A form that is there. Now, all the entries from GSTR1 which pertains to invoices issued, that is the invoice data that is captured in the GSTR1, gets reflected in table 3. Similarly, all data pertaining to invoices which have been amended gets reflected in table 4. The debit note and credit note details gets populated from the credit note and the debit note in table 5. Similarly, the amendments to the debit note and the credit notes gets auto-populated in table 6 of the GSTR2A. Now try to visualize, at least try to visualize this particular pic that is there. Can you see the pic that is there? What is the entries that is actually auto-populating? If you recall, this is nothing but the invoice data. This is the amendment data, amendment of the invoices. 9B is the debit note and the credit note, and 9C is the amendments made to the debit note and the credit note. Now, this data actually from these tables actually auto-populate into GSTR2A. So, in the invoice data tables, which tables of the GSTR1 will auto-populate into serial number 3? It will be in that same order of recalling that we do: 6B, 6C, 4A and 4B. Now, come to the amendment part. Which table? Table 9A. Credit note, debit note, 9B. Amendments to credit note, debit note, 9C. This is how the data auto-populates from the respective GSTR1s of the suppliers into the recipient's GSTR2A. I hope this is clear with all of you. Now, when it comes to the R2B, I'm just going to take it a little up here. R2B actually has fundamentally 3 components. It has the first part where it is possible to identify ITC available. The second part is ITC not available. And the third part is what pertains to actually Rule 37A. So, if you were to look at the GSTR2B form, again I would request you that when you are listening to this, actually you keep your GSTR2A and 2B forms in front of you. And also there is a slides which the 2A and 2B, you can visualize how the system actually has translated those forms into the for the taxpayer user entry that is there. Now you have to visualize what I am trying to say. I have told you that the 2B has ITC available and it has ITC not available. In what circumstances? Now, before I explain about not available, I want to pause for a moment and I put this thought into your head. In what circumstances, from the data that the taxpayer has entered in the various tables in GSTR1, in what circumstances is it possible for the system to now to say that ITC is not available? I'll come back to it. Maybe you guys will pause for a moment and think over this. In what circumstances, based on the data that is there in the GSTR1, the system is able to tell that ITC is not available. So, when it comes to the available part, again it is split into 4 parts in GSTR2B. The numbering is a little different. It is 3.1, 3.2, 3.3 and 3.4. Now 3.1 is the same logic. It flows from the R1 and the R5. R5, I told you, is a return filed by a non-resident taxable person. If you were to open up a GSTR 5, you will see that 90% it is the same as GSTR 1, except that there is an addition table which facilitates the payment of tax, GSTR 5. So there is 90% more or less. GSTR 1 and GSTR 5 are more or less the same. The tables auto-populating in R1 auto-populates which pertains to R5 also. It is the same. Part A of your 2A and 3.1 Roman 1 of your available part of your GSTR 2B are the same. 3.2 also is auto-populating from R6. R6 is filed in by an input service distributor, and if you remember the distinction that I put, TDS and TCS is a cash component, so it is not a credit component, and 2B is exclusively the details of input tax credit, so you don't have part C of 2A which will come in 3.3. So now I want you to think for a moment. I want you to think for a moment and visualize which input tax credit is actually missed out here in this particular entry which is there here. Which entry is actually missed out that is there. I'll leave it to you, I'll come back to it. Now 3.4, again I told you, it happens from the import of goods through the IceGate portal. Recall table 4B. If you recall table 4B, it means that if I have selected the checkbox reverse charge, it is not the supplier's liability, it is the recipient's. Liability. Now, so what 3.3 refers to is from the GA. Now, these are all entries that are happening from the R1s of the suppliers. In those suppliers, now R1 of this 3.1 is which is a table from R1 which will auto-populate into 3.1. It will be actually the same table 6B, 6C, 4A, 4B, 9A, credit note, debit note, and 9B amendment. I was telling you that the part C of your GSTR 2A, which auto flows from the GSTR 7 and the GSTR 8, the TDS and the TCS taxpayers, the returns filed by these taxpayers, it auto-populates in part C of your GSTR 2A. और एक बार ले यार, ये जरा डालेंगे तो अच्छा रहेगा थोड़ा मेरे लिए।
हाँ सर, ले सकते हैं, कोई बात नहीं। और ये फ्रेम थोड़ा सा ना और खोलो। नहीं, ये अपना फ्रेम खोलो भाई, मास्टर वाला जो सर का फ्रेम है, इसको थोड़ा सा खोलो, थोड़ा सा और खोलो। हाँ, बैलेंस ठीक है, इसको खोलो हल्का सा, जूम आउट करो, बस ठीक है, ठीक है सर। रेडी?
एक मिनट यार।
ठीक है, ठीक है।
शुरू करें?
हाँ जी सर, रेडी रेडी, ठीक है। 3, 2, 1, rolling, action.
Yeah, I was telling you that the part C of your GSTR 2A auto-populates from the GSTR 7 and the GSTR 8, which is filed by a TDS and a TCS person. Whatever auto-populates in part C flows into the electronic cash ledger. It is not an input tax credit, whereas a GSTR 2B is actually a statement, or it gives you the details of the input tax credit. Now, so which is that one part of the input tax credit which is not actually auto-populating which should actually is also an input tax credit, which should actually reflect in the GSTR 2B, and that gets reflected in the 3.3 of the GSTR 2B. Now, what is 3.3 of the GSTR 2B pertains to? It pertains to those input tax, it pertains to those entries in the table 4B. It pertains to those entries in the table 4B which the recipient needs to pay the taxes. Now, that means it is a reverse charge supply. So, table 4B of your GSTR 1, table 4B of a GSTR 1 of the supplier's GSTR 1, whatever entry happens, that entry auto flows into 3.3. Now, it has to create a liability. It has to create a liability for the recipient. It also has to give the liability if it is discharged. It also has to give the input tax credit to the recipient. Now, what we need to remember here is this is actually flowing from the table 4B of the supplier. It has to create a liability. Now, what it does is, whatever data that auto-populates here in 31, 32, 33, 34, 31, 32 and 34, it gives you an input tax credit, or it auto-populates the input tax credit tables in the GSTR 3B. As I told you that 31 is nothing but part A of the part A. 32 is similar to the part B of the GSTR 2A. 34 is nothing but part D of your GSTR 2A. Now, whatever entry that auto-populates into 31, you need to visualize this. I also told you the fact that from the GSTR 1, it goes into the invoice management system, and all those entries where the action is accepted or it is deemed accepted comes into 3.1. Now, whatever is there in the 3.1, it auto-populates table 4A5 of your R3B. So now this is the sequence of the auto flow that is happening between GSTR 1, GSTR 2B and GSTR 3B. So all these tables, now which are the tables which will auto-populate here, which actually auto-populates from table 6B, 6C, 4A, 4B, 9A, 9B and 9C, goes into the invoice management system. The invoice management system, after the action of accept, or if it is a deemed acceptance, whatever entries are there, auto-populates into 3.1, and this entry in the 3.1 will subsequently auto-populate table 4A5 of your R3B. Similarly, whatever auto-populates into 3.2 from your GSTR 6 file by an input service distributor auto-populates into table 4A4 of your GSTR 3B. Finally, the part 3.4 auto-populates into 4A1 of your GSTR 3B. What is left is 3.3. Now, 3.3 has to have two impacts. One is it should create a liability, and it is also the input tax credit pertaining to those entries should also be made available. So what the system does is, the system auto-populates the liability, that is the reverse charge liability with reference to supplies from a registered person entered in table 9B of the supplier. It auto-populates into the liability table 3.1D of your GSTR 3B. It also auto-populates table 4A3 of your GSTR 3B. This is how the auto flow or the auto population happens. This is the available part of the GSTR 2B. Now, I did ask you to pause for a moment and think, which entries in the GSTR 1, which entries in the GSTR 1, the system is able to identify that credit is not available. Let me tell you in what circumstances the system is able to tell. At the moment, there are only two circumstances in which, two situations in which the system is able to tell that credit in respect of this particular entry is not available. That is, the input tax credit is not available. Which are those areas? One, the first situation is, is there a time limit for taking input tax credit? It is provided under section 16(4) of the CGST Act. Now, credit has to be taken before 30th of November of the following financial year. Now, if an invoice is beyond this particular period, so for example, if what is the situation? The first situation is 16(4). The bar provided under 16(4), that means invoices pertaining to a particular financial year, the credit can be taken only till 30th of November of the following financial year. So, if there is a GSTR 1 of, let us say, 1/4/2023, 1/4/2023, if the credit pertaining to this invoice dated 1/4/2023, credit can be taken till 30th of November of 2024. Now, what happens in a scenario if this particular invoice dated 1/4/2023 is reflected in the Jan 2025 GSTR 1? If it is reflected in the Jan 25 GSTR 1, the system is now able to tell that it is beyond the cutoff date provided as per section 16(4), and it puts it under the category that ITC not available. The second circumstance is something that I just want to explain a little more as one. Now, I told you that an intrastate supply or an interstate supply depends on the location of the supplier and the place of supply. Now, let us say we are in Andhra Pradesh here at Nasin Palasamudram. Now, if there are anybody who comes, let's say that in Andhra Pradesh, people come from, let us say, Karnataka, people come from Tamil Nadu, people come from Maharashtra, people come from Delhi. And they go and take an accommodation in a hotel or somewhere in Andhra Pradesh. Now, the place of supply provisions, as per section, I think it is section 12.3 or 12.4, the place of supply provision with reference to an immovable property tells you that the place of supply in respect of an immovable property is the location of the immovable property. That means the place of supply in respect of an immovable property is the location of the immovable property. That is, the place of supply is Andhra Pradesh. The location of the supplier is also, that is, the place of supply is Andhra Pradesh. The from Karnataka, Tamil Nadu, Maharashtra or Delhi is not eligible to take the credit pertaining to the Andhra Pradesh state GST. So, in a circumstance where the place of supply is different, in that particular circumstance, the system is able to identify that input tax credit is not available and it puts it under this particular category of place of supply. The last part is a provision which is called as Rule 37A, which is inserted, I don't remember when, but it pertains to a situation where one of the conditions for taking credit, I think there are 4 + 2, 6 conditions for taking input tax credit. You need to, the document, that is the invoice and the debit note, should be available to the recipient. The goods and or services should have been received. The third one is that the tax should have been paid. And the fourth one is the return should have been filed. In between also they inserted the 16(2)AA, I think it says that entry should be there in the GSTR 1. There is a BA entry also. There are 6 conditions. Now visualize this circumstance. Now what happens is, in respect of this GSTR 1 entry, the supplier has not paid the taxes. For the example is very simple. If I am filing, say, January 2025 R1. If I use 1, it auto-populates into the 2B. We say that it auto-populates into 2B, but it so happens that the supplier has not paid the taxes pertaining to January in the 3B for January, but he pays it in March or April or subsequent period. Now, so because of the condition 16(2)C that is there, the credit is not available to the recipient in the month of January. He can take it whenever the tax has been subsequently paid. Now 37A provides a mechanism to identify that this reconciliation, whatever is there with reference to the in respect of a particular supply where the tax has not been paid till November 30th of the next financial year. In that particular circumstances, the system is able to identify that there is a particular supply in Jan 2025. The tax pertaining to this has not been paid till 30th of November 2026. Now the system is able to tell that in respect of these particular entries that are there, input tax credit is not available and it needs to be paid back. There's a mechanism that is put in place to pay back that particular amount. So that is Rule 37A, or the third part of the GSTR 2B. Now, before I go into the slides and give you that understanding with reference to the GSTR 2A and the 2B, I just want to take I just want to give you a little more information about the GSTR 2A. Now, what we saw here in the previous slide was, the flow of data in the tables from GSTR 1 into the GSTR 2A and the flow of data from the GSTR 1 into the table GSTR 2B, and whatever is there in 3.1, 3.2, 3.4 and 3.3 auto-populates into the respective tables into the GSTR 3B. This is what is this particular screen about. Now, let me give you a little more understanding about 2A and 2B. What is the distinction between a 2A and 2B is something that we need to have an understanding. Now that we have an understanding with reference to the flow of data, we also need to have an understanding as regards what is the distinction between a 2A and 2B. Now, most likely all of you would have heard that 2A is actually a dynamic statement and 2B is a static statement. 2B is a static statement, is what many of you may have heard about the fact that it is a dynamic and a static statement. What do you mean by a dynamic and a static statement? Now, there are two components with reference to the GSTR 2A and the GSTR 2B, which is actually auto-populating from the GSTR 1. Both of them, we agree, auto-populates from the R1. both of them auto-populate from the R1, and with reference to the R1, there are two components which actually impact or based on which the data flows into the 2A and the 2B. What is the two components? The first is the period of the R1. The period of the R1. It auto-populates from the R1. The first component is the period of the R1. The second component is the date of filing of the R1. Date of filing of the R1. What is the distinction between the flow of data into the GSTR 2A and the 2B? It's very simple, that with reference to 2A, GSTR 2A, it does not depend on the period of filing of the GSTR1. I'm sorry, I correct myself. It depends on the period of filing of the GSTR1. It depends on the period of filing of the GSTR1. It does not depend on the date of filing of the R1. What do you mean by this? What I'm trying to tell you is, if R1 pertains to Jan 25, the due date for R1 of Jan 2025 is actually 11/2/2025. Irrespective of the fact whether the R1 for January 2025 is filed on 11/2/2025 or it is filed on 11/5/2025 or whichever date, the period of the R2A will always be Jan 2025. The period of the R1 is the same period for the R2A. There is no change. Here, with reference to 2B, the 2B does not depend on the period of the R1. It depends on the date of filing of the R1. What do I mean by this? Let's try to visualize multiple possibilities that are there. Now, I told you that Jan 2025. Now, it is possible that that is R1 of Jan 2025. Now, R1 of Jan 2025, if it is filed on, the due date for this is actually 11/2/2025. Now, I give you another scenario that it could have been also been filed on 11 or let us say 10/3/2025. Or for that matter, it can be filed on 5th of May 2025. The January 2025 R1, certain taxpayers, there may be a delay in the filing of the R1. Now, in a circumstance where the R1 of Jan 2025 is filed on these three differing dates, the 2B has a very simple cutoff date. It says, what is the due date for Jan 2025? The Jan 2025 is 11/2/2025. 11/2/2025, I will call it as D. I will call it as D. For December 2024, the due date is 11/1/2025. So, what is 11, that is for January 2025, any GSTR1 that is filed between 12th of January 2025, 12th of January 2025 to 11th of February 2025, any R1s during this particular period, it could be even the R1s pertaining to October 2024, April 2024, or whichever R1s are filed, whichever period. It does not depend on the period. Whichever R1s are filed between these two dates will auto-populate into the 2B of Jan 2025. Now, look at this particular 10/3/2025. It falls between the bracket 12/2/2025 to 11/3/2025. Since it is filed, that is 10/3, it is filed between 12/2/2025 and 11th of March 2025, this will auto-populate as the 2B of February 2025. So, similarly, if it is 5/5, it falls between the bracket of 12/4/2025 to 11th of May 2025. Now, whatever, because the R1 of January 2025 has been filed on 5th of May 2025, it will, and it is within this particular the date bracket is there, because it falls within this date, it auto-populates into the April 2025 GSTR 2B of the recipient. This is the distinction. So what happens is, because it auto-populates based on all the R1s that have been filed between a particular date, the data is static. The data is static. Now, visualize the same example that is there, which I gave you here. For now, here in this particular circumstance, it was filed on 11/2/2025. It was filed on 10th of March 2025. It is filed on 5th of May 2025. Now, I am telling that there are three different suppliers: supplier 1, supplier 2, supplier 3. Supplier 1, supplier 2 and supplier 3 are filing Jan 2025 R1s. On 11/2/2025 for supplier 1, supplier 2 files it on 10/3/2025, supplier 3 files it on 5/5/2025, all are filing Jan 2025 GSTR 1s. Now, what do you mean by dynamic? I am trying to make you understand what is dynamic in this GSTR 2A. Now, what we first need to remember is, in respect of all these three suppliers, supplier 1, supplier 2 and supplier 3, for the recipient, it is always Jan 2025 GSTR 2A. It is always Jan 2025 GSTR 2A. Now, when the 2A of Jan 2025 is opened on 11/2/2025, the taxpayer will see only one entry pertaining to supplier 1. That is, the CGST, SGST or the whatever is input tax credit pertaining to only supplier 1 will be visible in the GSTR 2A of Jan 2025. Whereas, when the recipient opens his GSTR 2A on 10/3/2025, he sees now that in addition to the first entry of supplier 1, there is a supplier 2 entry also. That means it has dynamically changed. So that is what we mean by saying that GSTR 2A is a dynamic statement, GSTR 2B is a static statement. GSTR 2A date of filing of the GSTR 1. GSTR 2B does not depend on the period of the GSTR 1, it depends on the date of filing of the GSTR 1. So this is what I wanted you to remember also with reference to the particular scenario of GSTR 2A and 2B. Now, I just want to take those slides and try to make you understand, okay, what we have learned here on the board here. Let us see what the provisions of the law with reference to Section 38, Section 38 and Rule 60 tells you. As I was explaining to you, if you remember, it has 4 parts: Part A, Part B, Part D and Part C. Part C, I put it down here because it flows into the cash ledger. Part A, Part B and Part D flows into your credit ledger. Part A has those serial numbers 3 to 6. It has the details pertaining to the invoices, amendment of invoices, credit note, debit note, amendment of the credit note, debit note. The respective tables for invoices will be 6B, 6C, 4A, 4B. Amendment will be under table 9A, credit note, debit note under 9B, amendment in 9C. So all those data will come here. Whatever is coming under Part B, serial number 7 and 8 will pertain to the data in the GSTR 6. Part D will be from the import of goods from the IceGate portal. It will have both from the port of import and also from the SEZ supplies. Part C will be based on the GSTR 7 and 8. Now, if you were to just look at this particular aspect, I've just put the slide down to ES1. It auto drafts from whatever I've already told you. This is a dynamic statement. Now, what do you mean by a dynamic statement? Visualize this. There is an invoice number 1. It is dated 10th of November 2023. There is an invoice number 1 dated 10th of November 2023, and it is filed in the GSTR 1 of March 2024. The GSTR 2A will always pertain to March 2024. Despite the fact that the invoice number 1 dated 10th of November 2023 is reflected in the March 2024, it will reflect only in the March 2024 2A. Now, similarly, if the invoice number 1 dated 10th of November 2023 is shown in GSTR 1 of November 2023, the due date for November 23 is actually 11th of December 2023, but what the taxpayer does is he files it on the 5th of March 2024. Which GSTR 2A it will reflect in? It will reflect in the November 2023 GSTR 2A only. Finally, the invoice number 1 dated 10th of November shown in GSTR 1 of 23 is amended in GSTR 1. The amended invoice detail will reflect in GSTR 2A of December 23. So these are the examples that give you that indication as to what you mean by a dynamic. Whatever I written down there, it is shown there. You have the import of goods. It comes from the information is based on the information from the IceGate portal. The courier import details are not made available. That is your GSTR 2A. Now, this is an example just to make you understand. I think I'll use a pencil here. Yeah, this is, if you look at this, the GSTR 1 is all GSTR 1 file. It has been filed. It is filed on 12th of September 2020. Now the GSTR 1 is on, it pertains to August 2020. You need to remember that the GSTR 2A will always be August 2020 only, irrespective of the date when it has been filed, 12 September, 10 September, 12 September, whenever it is filed, it will always pertain to August 2020. That is, the 2A will always pertain to August 2020. Now, this is how, this is the example that I told you, and this is how it looks, that the form, the GSTR 2A that you will be having in your hands, if you were to look at it and if you were to try to visualize how it looks for the taxpayer when he is going to enter the details is not enter, the details in the GSTR 2A that is made available to the taxpayer in the form GSTR 2A. So it has a part A, part B and part D, and part C, which goes the TDS and the TCS one. B2B invoices, credit note debit, amendment to B2B invoices, credit note debit notes, amendments to credit notes debit notes. Now come to the GSTR 2B part. It has 3A, 1, 2, 3, 4, and it has a 3B1, which is actually the reversal. That is, these are the credit entries. If you recall that I told you, 3A1 is actually similar to part A of your GSTR 2A. 3A2 is similar to part B. 3A4 is similar to part D of your GSTR 2A. Now, whatever is there in 3A1, whatever is there in your 3A1, whatever is there in your 3A1 auto-populates into the 4A5 of your GSTR 3B. Auto-populates into the 4A5 of your GSTR 3B. 3A2 auto-populates into 4A4 of your GSTR 3B. 3A3 has to create a liability in 3.1D, and it auto-populates into 4A3 of your GSTR 3B. This entry 3A4 auto-populates into 4A1. So this part is the input into the GSTR 2B. This is that part which pertains to available entries. Not available in a circumstance where the invoice in the debit note is not entitled because there is the restriction provided under section 16(4). Because of that particular restriction, it is there. And invoice disbursement where location of supplier are in the and place of supplier are in the same state, it is able to identify that credit is not available. ITC reversal summary, which pertains to Rule 37A, will come under serial number 5 of your GSTR 2B. So that is with reference to your GSTR 2B as a pictorial representation. And again, if you have to have the information, it is generated on the 12th. If it is for monthly GSTR 1, it is 14th. It will generate on, for all quarterly GSTR 1s, it will generate on the 14th. It puts it into GSTR 1 ITC available summary and not available summary. ITC not available is in respect of invoice 16(4), and it is location of supplier and place of supply are in the same state. It's a static document as per this one, filed during a specified period. It only follows the date, that is D to D+1, or rather it is from D+1 to D. Information is based on, import of goods information is based on the IceGate portal. Okay. This is how the GSTR 2B looks for when the taxpayer opens up for himself. And if you look at it, if you see here, there is an ITC available, there is an ITC not available. And it is also telling you that it is first entry, that is 3A1, will auto-populate 4A5 of your GSTR 3B table. It's giving you an indication in the 2B itself that whatever amount, that is 55,88,620, is reflecting in 3A1 of your 2B, will go and auto-populate into GSTR 3 table 4A5. 3A2 into 4A4. 3A3 creates a liability under 3.1D. It gives you the input tax credit under 4A3, import of goods under 4A1. So whatever amount that is reflected here goes into the respective tables of the GSTR 3B of the recipient with reference to the input tax credit. Available. And if you see here, it tells you invoices, debit notes, invoices amendment, debit notes. That is 3A1 comprises of these document details, which pertains to this which table. If I were to ask, if you were to just recall which table this is actually pertaining to, if it is invoices, it will pertain to 6B. Despite the fact that I can always tell you it is 4A, 4B, 6B, 6C, but the logic that I built you was SEZ comes first, deemed exports, others, and others. Because the reverse charge entries will come here. The reverse charge entries will come here. Now, debit notes, table 9A. Debit notes, 9B. Amendment to invoices, 9A. Amendment to debit note, credit note, 9C. So this is how it auto-populates into the respective tables. We'll just conclude this with showing you, not available, ITC not available. If you see here, it says ITC not available, it says 2605 central and state GST is not available. In what circumstance it is not available? In a circumstance where it is telling that the return is filed post annual cutoff. So it is beyond that date which is provided under section 16(4) for taking the credit pertaining to this particular invoice. If you see here, the invoice is dated 23/5/2018 and 1/1/2019, and it pertains to August 2020's GSTR 2B. Now, this is where this one small slide we use it to have this understanding as to which GSTR 2A and 2B which actually pertains to. Let us look at this particular here. If you see here, the R1 of these various suppliers, these are the suppliers that are there. The R1 pertains to June 2018. All pertain to June 2018, but actually they are filed in July 2018, December 2018, October, July, August 2020. Now, if I were to ask you, the 2A will always, the GSTR 2A will be always June 2018. Now, the 2B of this particular entry will be which? It falls between the bracket, which is the date bracket that is available. It falls between 12th of June 2018 to 11th of July 2018. So this will be actually in June 2B. That is June 18 2B. Despite the fact that there was no 2B in June, I'm just giving you the understanding here. If it is 31st of December 2018, it falls between the bracket 12/12/18 to 11/1/19. So which GSTR 2B will it fall under? It will fall under December 2018 2B. Similarly, this will fall under October 2B. This will fall under July 2B, and the last entry will come under, it will come into the August 2B. So that is the distinction between a dynamic and a static statement, a GSTR 2A and a 2B. Similarly, I have another slide. I think you will, because it is part of your study material that is there, you can always have a look at it and always find out which 2A and which 2B it pertains to. So I think now we have covered what you call as, we have the GSTR 1, we have done the GSTR 1A, we have the invoice management system, you have the GSTR 2A and the GSTR 2B. We also understood the flow of data amongst from the GSTR 1 into the 2A, from the GSTR 1 into the invoice management system. That is from October 2024. Prior to that, it was GSTR 1 into the 2A and the 2B. That is what it was happening. Okay. Now, and also from the 2B, we also understood that whatever is there in the available part of 3A flows into the 3B tables also.
That brings us to the end of this episode of the Prajna series. Today, we revisited the key concepts discussed so far and explored the intricacies of GSTR 2A and GSTR 2B returns in detail. In the next episode, Shri Rajesh V. George will guide the participants through GSTR 3B returns.